We're joined now this morning by Jon Fisher. He's a portfolio manager at Fifth Third Asset Management. Jon, good to see you again. And give me your reaction on this deal by Intel. Is it more about the strategy for Intel to get into the smartphone market, or is it about the down cycle that we're seeing in the PC space?
Well, I think from their perspective, it's more of a growth strategy, trying to get a better penetration into the mobile market and to come up with products that can allow them to grow and penetrate deeper into that market.
Right, and they were, as Sheila has been talking about all morning long, they were in that market 4 years ago, but they sold out of it. So, in some ways, when you look back on that, you could say that was a mistake by Intel.
Well, I think when you look at Intel over the last 20 years, let's say, their efforts to branch beyond just making PC semiconductors and server semiconductors have not been very successful, whether you look at any of their ventures in the 90s or last decade. So, they failed once before. They're going to try it again with a more critical mass, with a more established business and product profile. Right. But at the end of the day, they've struggled to diversify out of their traditional core business. So
how is this one going to be different then, integrating this unit?
It may not be different. Again, they've struggled over the last 20 years when they've gone through efforts to diversify out of their core semiconductor business for PCs and servers. And again, there's no guarantee that this is going to be successful or that they're going to be competitive.
Okay. Well, speaking on the larger picture, though, for Intel, I mean, the company on Friday lowered their guidance for the third quarter. Some are saying that this is just perhaps maybe the beginning, or getting into the, well into the beginning of what we're seeing is this down cycle in the PC market, and it's only going to get worse. We might see further cuts in forecast.
I would agree with that assessment. I mean, if you look at the performance of semiconductor stocks in general, they've been in a pretty steady downtrend since the April earnings season. Yes. There wasn't much of a sustained reaction to beats and raises in the months of July. So the market has been discounting and forecasting struggles in the near term and next year in the semiconductor cycle. Basically, what we've been waiting for from investors is for the companies to admit that their businesses peaked earlier this year. Intel's kind of laid out the first press release. There will be others over the course of September and October and November. And I would strongly agree that this announcement from Intel won't be the first cut at either 2010 numbers or probably 2011 numbers.
So you expect another cut from Intel?
Oh, yeah. And, I think the market has priced in this first round of cuts that it's anticipating. I think the real question from the market's perspective is not if there's going to be another round of cuts. It's how deep is that second round of cuts going to be. So the market's pricing in a certain degree of a second round of cuts to come from companies. So it's already moved beyond these first round of cuts that we haven't heard about. Right. And the uncertainty lies in what is the magnitude of those second cuts. I see. And so there could be further downside in semiconductor stocks if we get dramatic first and second round cuts from these companies. Okay. So clearly the question is, how deep is that going to be? Jon, we'll have to leave it there, but I appreciate your time. Jon Fisher of Fifth Third Asset Management.